Hello traders, this is Rich from Tradesight. This is the market preview for Thursday, March 13th, 2014. We had on the top line here, we had kind of a do-nothing day, except for the Nasdaq asserting itself just a little bit and coming back with a little bit of relative strength. But the broad market measurements, the Dow was unchanged, the S&Ps were up 2 handles, so it doesn't look like much. But we had a pretty nasty opening, and the market was kind of able to recoup that for now at least. The only negative really was the internals weren't very good. The advanced declines were up 400 plus issues on New York, and while the Nasdaq side was up 18 handles plus, we're only plus 300 issues, which is not impressive. It doesn't really do that much to help the cumulative advanced decline line, which may be in the process of rolling over right now. So we'll get to that, the market internals in detail in just a little bit. But let's first move on and take a look at pure price action. Here's a look at the Nasdaq side of the market. We use a 7/8 level as support. We did close the gap that was open from last week, so that's definitely technical development. We closed it by a fairly wide margin, so we're not in any jeopardy of that still being open. Had this negative day. We did follow through below the 10 EMA, so we got a settlement below the 10 EMA. We took out the previous day's low, so we're actually short-term negative, even though we closed back above the 10 EMA right now. It's kind of a little inside baseball distinction, but it's very important. If we do continue back up to the upside, we're going to have some a little bit of resistance at the previous day's high, and then much more important resistance at range high, and then at 8/8 at 37.50. To the downside, the gap is already closed, so we're only going to find very, very modest support right there, and we're not going to really find anything until we get right back to here, which is the previous breakout level on the chart at about 36.27. Moving on to the broad market side of the market, the ES futures were essentially flat on the day, but they did recoup a fairly substantial loss here to close near the high of the day. Anytime you close near the high of the day, even if you're not really making much progress to the upside, that's a notable development, and we do have that here in the ES side. We did qualify this breakdown to the downside here with a close under the 10 EMA, but we need one tick lower than today's low to make this chart turn short-term negative. So we're close to there, but that remains to be seen. 1875 is for sure going to be the level to watch to the upside if we do roll up. One distinction here, one difference. The Nasdaq futures had been relatively weak, and they did close this this exhaustion gap, but that's not closed here on the ES side. So the ES side has a big gap to fill here at 1843 3/4. So make sure you're aware of that. And if we do roll to the downside, that's definitely going to be a target. Here's a look at the Dow Gold Ratio, which is one of our risk-on, risk-off metrics. We did make a new low in the move here on the on this ratio, so we're definitely still seeing some risk being taken off here. Money's still flowing into gold. They're still kind of bidding for equities and kind of holding them fast for now, but it definitely is a breakdown in the chart. You can see these areas up here are going to remain unchallenged for a while. Here's a look at the cumulative advanced decline line on the New York side. Still holding pretty steady here, not really in shape for a lower high yet. Looking at the bottom chart here, this is the Nasdaq side. Nasdaq side, we definitely could see a little bit more negative action. We have this little retracement, which is turning into a consolidation area here. If we break down below this low, which is coincident with the previous high watermark, that's going to be a notable development. But for right now, we're just kind of standing fast. Don't forget, we're going to take a look at the weekly cumulative 80 line a little bit later in the week when we get closer to seeing what we're going to wind up with going home with in the weekly time frame, which is very, very important. Here's a look at a comparison chart. This is the oil services index, which is the red line here, the OSX versus crude futures themselves in the raw form. Pretty much what usually happens is you really need a lead from the oil services to the downside to get a break in crude futures. While crude futures were trying to break to the downside, the oil services were essentially holding up here fairly well and drawing price back up. You can see that while the oil futures were rolling down pretty hard here, the oil services index itself didn't break that hard. You can see this low back here, and this low is higher in the OSX, while in the same time frames here, the oil futures themselves were heading lower, showing relative weakness. What that really means is that the oil futures aren't really ready to break for real, and that they'll be pulled back to the upside. We do have a potential lower high here setting up in the OSX, so we got to keep an eye on this. But right now the oil futures are heading lower, but we're really not seeing a confirmation from the OSX here. Here's a look at the SOX NDX cross. We're getting back up to a key resistance area here. Whenever you see relative strength in the SOX, that's an important internal sign of strength. But right now we're curling back up to try that previous high. Haven't been able to take it out yet. If we do take that out, we're going to put these old highs in place, especially if we wind up making a bit of a handle here. You can see the cup formation here. All we have to do is make a little bit of a handle here. But remember, a cup and handle formation is fine, but it's really nothing more than a double top if we roll back to the downside here. So we really need to see a move either way to get a little more clarification from this one. All right, here's a look at the VIX. That's in red versus gold. One of the things that's really interesting is gold tends to lead the VIX. And we've seen this time and time again. So if you look back here at the left of the chart, you can see how gold started rolling up here pretty aggressively, and then the VIX was still on its way down, and then gold really started to move to the upside, and then you can see that the VIX ultimately resolved itself and went back to the upside. Right now, gold's trying to get higher, but hasn't really been able to cobble anything together and take out this previous high. If this previous high gets taken out, expect the VIX to follow it, but for now, we're still kind of in the beginning stages here of what could be another pretty interesting move. Here's a look at the multi-sector daily chart. Definitely the standout today was certainly the semiconductors getting up to challenge that previous high. The banking index didn't do too much. That was fairly weak. The XAU is trying to pick up here, but hasn't really been able to bust out of this recent range, even though gold's heading higher. A little bit of a cause for concern there for the gold bulls, because you really want to see the underlying index, that's the gold miners, the XAU, really start to lead and pick up some leadership here. We're really not seeing that right now. So really what's going on in gold right now, while it's really interesting and the gold chart looks pretty spiffy, really could be just a flight to safety and some forced buying and forced covering of the shorts, if you will. Here's a look at the gold chart. Pretty well defined as far as the features go here. We've got a 9 to the downside here. Then we've got a 13 exhaustion warning right at the bottom of the cup here. So what we're seeing here is a cup, and here's a handle. We're trying to break out above the static trend line. We did break out and settle above the static trend line. That's the high water mark right here from this 9-bar drop, this green line. We did break out above that. We got really close to trying that 8/8 level. If we follow through above this this day's candle, we're probably going to wind up putting these higher levels in play. Plus 1/8 level at 1406, and then the plus 2/8 level would be the ultimate target at 1437.50 on the cup and handle breakout. So keep an eye on that, and if you do see long setups in gold, definitely do not pass on those. Here's a look at the individual sectors. We're going to rank them from best to worst, as we like to do. XAU was top gun on the day, up right about 3%, which should be no surprise with the outperformance of the gold names. The utility index was pretty strong today. It was a really strong bond auction today, so that definitely helped that. Semiconductors also were pretty hot today, up about just a little less than 1%, and the BTK wasn't too shabby either. Bottom of the list, the airlines, the defense, telecoms, and the pharmaceuticals are all pretty weak. Oil services were buried pretty far down the list. It would have been nice to have seen them up on the day to participate a little bit more with the transportations. All right, folks, as always, thanks for listening. This has been Rich for Tradesight.